terms of the interim results for 2014, we've announced our results today to the end of June 2014. We're pleased to see our revenue grow by 13.2% to 4 billion despite the very difficult economy. That translated into operating profit growth of 14.5% despite the gross margin declining slightly. We were able to achieve operating profit growth of 14.5%, first and foremost by productivity improvements across our business and a clear and distinct focus on cost. The productivity improvements have been underpinned to a large extent by the investment program we've undertaken over the past years, so it's nice to see that coming through, especially in these difficult times. Underlying earnings per share have grown 19.2% to 91.8 cents per share, and our board has announced declared a dividend of 26 cents, which is up 18.2% on the same period last year. So despite very tough economic circumstances, we were impacted by all the things that you've heard about in the press from others. Our growth was quite subdued. I mean, across the business we had growth of 1.8% in volume terms, of which some came from an acquisition which we did last year. So without that acquisition it was only 1% growth, which reflects the subdued economic activity. So despite that, through various interventions in our business, we are able to report some growth in the period. If we turn now specifically to the underlying businesses, firstly in the paper business, we saw revenue growth of 14.2%, which was underpinned effectively by average prices up on the prior year and also the acquisition of Mpact, which contributed a large extent. The price increase that we achieved in the last part of last year was certainly not enough to recover the raw material cost increases that we've experienced in the intervening period, which saw the EBIT margin, or the underlying operating profit margin, declining from 9.9% in the prior year to 9.6% this year. Which is in itself a disappointment, but having said that, the operating profit in that business is still up 11.7% despite the difficult circumstances in a very difficult environment. So all in all, I think the resilience shown in that business just reflects the positions that we have in the markets that we're in, and our ability to deliver returns despite the difficult circumstances. In our plastics business, we saw a nice improvement in operating profit, which was up 28%, albeit off a low base, to 44 million rand over the last year. Revenue was only up 10.4%, underpinned mainly by price increases, which followed the increases in raw materials, which have run basically on the back of the depreciating currency over the period. So a 28% improvement is very encouraging, and we think that the plastics business has managed to deliver a good performance in these times. We saw growth in certain sectors with declines in others. So in our bins and crates business, we had good growth in the period, whereas in the FMCG business, we had quite big declines, which were a consequence, on the one hand, of the underlying market conditions, but also of rationalization of certain product lines, which was necessary to remain competitive. We have announced today that we will be closing one of our factories. That's our Robertville factory, which is in our FMCG business. We will be relocating the plant to two of the other factories to remain competitive and ensure the business has a viable future. And we are proactively doing that, and hopefully by the end of the year that will be completed. In terms of the outlook, we see that the subdued economic conditions are going to continue. I mean, there's no sign of those abating. And that will make it difficult to recover some of the raw material cost increases in the second half, particularly in our paper business, where we normally increase our prices from October. And that challenge remains to be overcome. Despite that, we are confident in the strategy, our resilience, and our good market positions, and we'll work diligently to make sure that we deliver a performance as good as can be given these circumstances. Despite the challenging economic conditions in South Africa, it must be said that we continue to identify opportunities for growth and investment in the country. And today we've announced a 350 million rand investment into PET recycling, in other words, plastic recycling, where we will recycle some 21,000 tons of plastic bottles a year in a plant that will be built in Germiston, Gauteng. And that is a partnership that we have undertaken with the IDC, who will be a shareholder in that business, which is going to be called Mpact Polymers. This is a substantial investment in recycling in South Africa, and we believe it's going to also contribute at least 1,000 jobs in the sector, not directly in the business, but in the broader recycling industry for the collections of those bottles. So a very exciting project which we can talk about, which I will be talking about a bit later, in various forums. The strikes that we experienced in the plastic sector, which unfortunately was part of the Metals and Engineering Bargaining Council, did affect our business. We had 6 of our plastics operations which were affected by that 4-week-long industry-wide strike. And today we've given an indication that the costs associated with that strike would be about 20 million rand in our business, and we hope to offset some of that in the second half of the year. So that summarizes the business. We remain optimistic despite the challenging circumstances. We've built strong positions in the areas that we operate, and we look to exploit those in the time ahead.